Good morning, ladies and gentlemen. How are you doing today? I'm so excited this morning, and I hope you do. And how are you preparing for today? So let's quickly confirm that we're on the same page here. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. So I would like to see some feedbacks right in the comment section so that I can be sure that we are good to go this morning. So let's quickly do this. All right, so let's see what we have in the comment section. Okay, I can see okay, I have Vanessa Tech. All right, good morning, thank you. 959. All right, thank you very much. 483, thank you. 387, thank you. Vivi, good morning, glad to have you around. 1121, all right, thank you. Hey Carrie, I see you, good morning to you. Hi Max, good morning, glad to have you around once again. Okay, thank you Carrie. And I have Doc 81. All right, so I will be taking this as a positive confirmation that we are good to go this morning. Welcome to another promising session on the Extreme Speed, and my name is Sheriff Daramola. As usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's our well, it's our usual here that we review all the pairs we've been monitoring since the beginning of the week, and that is exactly what we are going to be doing this morning. And for those who are joining us for the first time, you are welcome on board, and I hope that you find this session very useful in preparation for the New York session today. So before we go into the chart right now, the first thing we are going to be doing as usual is to have a peep into the economic calendar, as we have I think we have one macroeconomic event that is going to be affecting one of the pairs that we have been monitoring since the beginning of the week. And when we look at the economic calendar here, this is what I was able to find, and that is the Bank of England's monetary policy report hearing. So though this report had already happened, and so we are going to be doing they're going to be doing a hearings today, which appears to have already happened, I guess. Hold on a second, let's see. Okay, I think I got things mixed up here. Hold on a second, I'm trying to let's load this up. Let's refresh this page and let's have what is happening today. Okay, I got things mixed up there. I was actually looking at the one for Thursday, but I'm finding it difficult to load up this calendar at the moment. But let's see if this will load up in the next 30 seconds before we dive into the charts. All right, let me try to load up another one. I wonder why it isn't loading up this morning, so let's find someone else. All right. Okay, so we should be looking at another one since the FX Street calendar is not loading up for today. So we shall be looking at high impact event. So today is the 8th of February. We'll be focusing our attention on. Okay, so we really do not have any macroeconomic event for today, so we shall be leaning more on our technical skills to identify trading opportunities. However, we should also take note of the FOMC that happened yesterday, and it appears from this page that the Fed still going to be increasing interest rate, and this is something not of a good news for the US dollar, and we are beginning to see the reaction in that regard on the chart. So during the live session today, we shall be reviewing all these options and then plans for the New York session today. So once again, welcome everyone, and let's dive into the current structure. So the first pair we are going to be looking at this morning is the US oil, and in fact the US oil has been our most successful trade since the beginning of the week. And you remember vividly, we were able to join this bullish momentum right above the $74.20 level after price action broke out of that channel within the $74.20 level and the $73.35 area. Though we had an initial breakdown of that structure at the support level at the $73.35 level. Initially that was later on Monday, which turned out to be a false breakdown, shaking out a lot of people from that market, and then we finally saw that breakout of that $74.20 level. And in fact, since then, price action had moved significantly well, finding higher highs and higher lows. And if you had been part of this trading journey since the beginning of this week, you will currently be running with about 420 pips in profit. And in fact, that's one single position. And if you remember, we were able to add some positions at the breakout of structures like the $75 level, $75.50 level, $76.20 area, which was a structure we were looking forward to a breakout of that level during the live session yesterday. Remember, we identified the structure here where we set the bearish trend line here, and the $76.20 level shall be our guide for trading activity for yesterday. And in fact, we saw our price triggered above the structure here, and price continued to move to the upside, hitting our TP target at the $78 level during the early hours of today. And in fact, I also had a position triggered above the $78 level. That was a new position that was triggered earlier on today, and it appears price action is running with about 39.40 pips in profit at this point. And if you have been part of this move too as well, well done to you guys for being on standby to catch that move. Now, with that being said, here we shall be looking at the daily time frame. Let's quickly have an holistic view of what is really going on in this market, and let's see the possibility of how far this bullish momentum that we have been witnessing since the beginning of the week will be going. And for those who had missed out on these opportunities, we shall definitely be looking forward to see how we could take advantage of a possible trend continuation to the upside, if that is going to be the case. And if this is going to be a bearish momentum, then we shall be getting ready to join that move to the downside. So the next thing we are going to be doing right now is to scale up into the daily time frame to have a peep into what is really going on this chart. So on the daily time frame here, if you remember, if you have been part of the live session since the beginning of the week, we took into consideration the bearish momentum in the last 7 to 8 months. Now, as we can see, price action had continued to find lower lows and lower highs, and as a result of this, we connected a series of lower highs here to give us that bearish trend line, which has been guiding bearish momentum in the last 7 to 8 months. And if we zoom into the current structure, remember that we have a couple of structures here that was identified at the beginning of the week, and one of the structure is the $80 level, which has been a strong selling niche in the last couple of months. You can see how price action has been evolving into some reversal patterns around the $80 level to incite some bearish momentum. We saw the situation happen here in the month of November. We saw again here November stroke the first day of the month of December. We saw that reversal pattern there evolving into some selling pressure, and the same thing happened here during the later part of December last year and the first trading day of this year, as we saw another bearish engulfing candle, bringing price out of that structure to further emphasize the strength of the sellers at this point. Then in addition to the $80 level was the $73 level, which has also been a major determinant of buying pressure in the last 3 months. And if you look at the structure here, you can see how as soon as price gets into that level, we have been witnessing buy pressure from that level. Though we had a little breakdown here in the month of December, immediately price climbed up above that structure, did a retest of that level, and since then we have been seeing a situation where price had continued to trade above that level. Then at the beginning of the week, we were at a critical point in the market where we told you that price action is currently trading around the $73.50 level, a level which has a strong memory for buy pressure. And one thing we said here is that we want to monitor our price action will be reacting to the $73.50 level to decide what our next line of action will be. And we were actually looking forward to a reversal pattern here, probably to push price to the upside, or a trend continuation pattern that could bring price down to the downside. And in fact, we were able to identify a structure on our 1 hour time frame after monitoring our participant in this market was actually reacting to the $73.50 level, after which we were lucky enough to be part of this bullish momentum that took us all the way through the $75.50 level back into the $78 area where we took our profit. And in fact, if we add up all those positions here that we had, we will definitely be running into about 800 to 900 pips as we had multiple entries. Now that we are going into the New York session today, it's very important I state here that we are right back into a very important structure right now. As we can see, prior to this situation here, it started around I think the second week of January, where we saw our price action was caught within this channel here between the $82.50 level and the $78 area. The $78 area was holding buy pressure for about 2 to 3 weeks before we saw the final breakdown of that structure here during the course of last week's trading session. We saw the retest of that level here, and we were part of this bearish momentum that brought price back into the $73.50 level. And you know, from a technical standpoint, whenever we have a breakdown of a structure like this, there is a likelihood that price will come back to do a retest of that structure to incite another wave of bearish momentum. So at this point, we are at a critical point right now as price action is back into the $78 level, a level which was broken during the course of last week's trading session. So what we want to be looking forward to today is to see how price action will be reacting to the $78 level to decide what our next line of action will be. So there are 2 things we want to be looking forward to at this juncture, and one of the situation we shall be expecting is, one, if we start seeing selling pressure, probably price action continue to reject the $78 level, transitioning into something like a reversal pattern. It could be a double top structure. Then this will be a beautiful sign that sellers are appearing to be resuming back below that structure that was broken during the course of last week's trading session, and this will be a very beautiful signal for us to join that decline to the downside. However, if we cite a situation on our lower time frame here where price action evolves into a trend continuation pattern, breakout retest of this level on our lower time frame, then it will be a good opportunity to join the rally to the upside. So these are the things we are going to be looking forward to during the New York session today, and in fact we are going to be scaling back down to our lower time frame to see how price action will be reacting to the $78 level to decide what our next line of action will be. And one thing I would also like to call our attention to is how the $73.50 level had been a strong buying niche in the past. And if we look closely into the structure, we can see that every time price comes into the $73.50 level and buyers take over the market, they normally push price above the $80 level. You saw the same thing happen here in the first week of the month of January. We saw bullish momentum which broke out of the $80 level, and then we have a situation here right now as price action is still moving. So I'm of the opinion that we might likely see price climb up, breaking out of the $80 level. As you can see here, in the last couple of months, participants in this market have been trying to break out of the structure, and with the breakout a couple of times here during the first couple of weeks of this year, we might likely be seeing that momentum gathering up to push price out of the structure. So scaling back down to our 1 hour time frame, let's see how price action is reacting to the $78 level that we just identified on the daily time frame. Now, before we go into the 1 hour time frame, I want us to have a very clear perspective into what is really going on here, and because of this I would like us to look at the 4 hours time frame. And when you look at the 4 hours time frame here, you can see how the $78 level had been a major determinant of price action in the last couple of months. For the sake of this session, let's just zoom into what has been happening here since the month of January. And what you will see here is that the $78 level at one point in time has been a strong buying niche in this market before the breakdown of that structure happened during the later part of the month of January. And then at the beginning of the month of February, we saw the breakdown of that structure. In fact, we saw another retest, and right now price is right around that area, and in fact price has even broken above that $78 level at this point. So is the breakout of the structure going to be a false breakout or a true breakout? So this is what we are going to be looking forward to. And now another thing I would like to say here is that the $78 level has been a strong buying niche in the past. So if we start seeing buy pressure above the $78 level, something like multiple rejection of that structure by the buyers, then we might likely be seeing another opportunity to add more position to our existing trade. So with that perspective in view, now we shall be scaling back down to the 1 hour time frame, and like we said, price action had broken out of the $78 level. And for those who are taking advantage of this opportunity here, kudos to you for being on standby to catch that move. And what I will be saying is let's see how price action will be reacting to the structure. And for those who had missed out on this opportunity, what I will advise us to do is to remain patient. You know, from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure to incite another wave of bullish momentum. So we should not be worried if price action drops back down into the $78 level, as we want to be seeing how price action will react to that structure to decide if we are going to be buying or selling. So if we see buy pressure above the $78 level after a retest of that structure, then we should be getting ready to join another wave of bullish momentum. However, if price action drops below the $78 level and price is unable to break back above the structure and it's followed with selling pressure below the structure area here, we might be seeing a bearish momentum whereby the breakout here will turn out to be a false one. So these are the things we are going to be looking forward to, and you would agree with me that the $78 level is going to be a key level that we shall be using to guide trading activities for today. So in addition to the $78 level, I want us to look out for another structure that we shall be using to guide trading activity, and that is a trend line. Now, if we bring out our line chart here and then we connect the series of higher lows here. We have higher highs and higher lows, I guess. So we can see price at one point in time respected this level, rejected it before we saw the breakout of the structure. And since the breakout happened on Tuesday here, breakout of the $75 level, price action has been trading above that structure. So we might likely see a situation where price drops into the trend line to incite another wave of bullish momentum. So it's very, very possible that we have a situation. So if price action breaks down the $78 level and we start seeing selling pressure below the structure, this is going to be a retracement of that impulse leg that started yesterday. So we had this impulse leg that started yesterday, so we might likely see a retracement back into this trend line to incite another wave of bullish momentum. So if you are a counter trend trader and you are taking advantage of the breakdown of the $78 level after sighting selling pressure below that structure, you want to be moving your stop loss accordingly as price action moves in your favor. So that's like 100 pips thereabout if you are a counter trade or a scalper at this point. But if you are none of these, I will suggest that you remain patient. Even if price action breaks down the $78 level, wait out to see how price action will be reacting to the structure to decide to buy the US oil at that point. So what happens if price action does not drop back into the $78 level and continues to climb to the upside? Well, if that is going to be the case here, let's look into the past here and see if we have a structure we can use to guide trading activity. So at this point, we had the support level here. That was on Tuesday last week. We had a support level somewhere around the $78.600 level, $78.60 level, and that's somewhere around here. So if we are going to be labeling this for the sake of clarity, so we have the $78.60 level somewhere around here. So what happens if price does not drop back into the $78 level but instead continue to climb higher highs? Well, a breakout of the $78.60 level would be a beautiful opportunity for us to add more position to our existing trade. After which we are going to be monitoring how participants will be reacting to the $80 level to decide if we are going to be adding more position or we are going to be getting ready to join a decline at this point. So that is my view here on the US oil for today. I hope you munch my screen so that you can use it as a reference point when you're about to make your individual decision. And if you have any questions whatsoever regarding what I just explained so far, feel free to drop your inquiries in the comment section, and be rest assured I'm willing to be of help in that regard. So with that being said here, let's move on to the next option. And the next option we are going to be looking at this morning is the US tech. And on the US tech also, we had a beautiful buy position that we took advantage of yesterday. And you remember how the week started on the US tech. So the week started with a situation where we caught price action within this channel around the $12,550 level and the $12,500 area. And in fact, we saw the breakdown retest of the 12,500, which triggered our sell position. And one thing I told you yesterday about this current structure is the fact that the buy pressure we have been witnessing around the 12,420 level in the last 72 hours, it's a beautiful sign that the breakdown of the 12,500 level by the sellers do not have that momentum to break down the 12,420. As you can see here, we continue to see buy pressure at every point in time. Sellers try to break down this level. And one thing I told you about the sell position that we had yesterday was that if it takes us out of the sell position, that we should not consider selling at this point unless we have an outright breakdown of this temporary demand zone to the downside to give us a signal of a bearish momentum. And that actually did not happen here, though we saw some little volatility in the market around this area after the I think prior to the FOMC we saw some little volatility here before price action came back. And one thing I told you yesterday is that since we already have a channel between the 12,500 and the 12,550, where the 12,550 level is serving as a resistance point for this week. A breakout of the 12,550 will be a beautiful opportunity for us to join the rally to the upside. And in fact, we saw the breakout of the 12,550 a couple of times yesterday, and price action moved significantly well in our favor as price action hit the 12,770 level. And in fact, price action moved about 220 pips in our direction, and I hope we were able to make some money as we saw price move in our favor. Now that we have the situation here, congratulations to everyone who has been part of this trade. And if you still have a trade running right now, probably price has not hit your TP target and you still have an open position running on the US tech, I will be advising you that you should move your stop loss to lock in some profit at this point. And if we take into consideration this current structure here, I will be advising that somewhere around the 12,650 seems most appropriate to lock in some profit as we continue to monitor price action from this level. Now, as you can see here, as soon as price tested the 12,770 level during the later part of the New York session yesterday, we can see how price has been caught within a channel right within the 12,770, which is the resistance point of the channel, and the $12,700 level, which is the support level of this channel. Now, it emphasized that there is an indecision in this market right now as participants are still struggling to find the next move on this one, and we might likely see a situation where the channel here transitions into a reversal pattern to incite a retracement of this previous impulse leg. That is one scenario we might look forward to today. And another thing that could happen is that price this channel could transition into a trend continuation pattern where a breakout of the 12,770 will be giving us an opportunity to add more position. So with a flat channel here, you all know what we always look forward to whenever we have a flat channel like this. We need to be very, very patient at this point as we look forward to either a breakout or breakdown of this channel to give us an opportunity to either buy or sell. So we shall definitely be looking out for buying opportunity above the 12,770 and selling opportunity below the 12,700. But for me personally, I wouldn't be selling at this point as any breakdown of the 12,700 level is likely going to be a retracement of that previous impulse leg, probably back into this bullish trend line here to incite another wave of bullish momentum. However, if you are a scalper or a counter trend trader, you might want to take advantage of that move, which is likely going to be giving you about, let's see, about 120 pips in profit if you are able to be part of that move. But if you are not a counter trend trader, neither are you a scalper, I will suggest that you remain patient and let's wait to see if a breakdown of this 12,700 happens, that price comes back into a structure that we want to be using to guide any further bullish momentum here. So to better have a better perspective into what is going on here, let's have an holistic view on the daily time frame. Let's see what the structure on the daily time frame is saying compared with what we have on the 1 hour time frame, and let's conclude on the US tech for today. And so we are on the daily time frame right now, and this is the daily time frame here. And remember, it's been a very strong bearish momentum since last year here, and to emphasize the bearish momentum here is the connection of the lower highs here, which gave us this resultant bearish trend line. However, a couple of weeks ago, we saw the breakout of that trend line, signaling a strong bullish momentum as the trend line was no longer strong enough to continue to hold bearish momentum. And one thing about this structure is the fact that as soon as price tested the 12,900 level here, we have been witnessing selling pressure from that structure. And if we compare what has been happening around that area in the past, you can see how that trend line, that's 12,900 level, had been a strong determinant of price action. In fact, this has lasted about 9 to 10 months here. As you can see here in the month of February stroke March, this level was a strong demand zone. We saw some buying attempt here in May before the breakdown of that structure happened here. Then price did the retest of structure, further emphasizing the strength of the sellers, though we had a breakout of this level here in the month of August, but price broke down the structure in the month of September, retest of structure to emphasize the strength of the sellers at this point. And right now, in the last couple of weeks, we have seen price come back to do a retest of the 12,900. In fact, we have been seeing sharp rejection of this level, and at this point in time, we might likely be seeing a bearish momentum here, considering the fact that that area has been a strong selling niche for participants in this market in the last 10 months. Now, with the situation we have here, couple of multiple rejection here, and looking at what we have around this area, the 12,770, which is the level we identified on the 1 hour time frame. That is this area. We have been seeing multiple rejection of this level since yesterday, so we still need to monitor our price action. We'll be reacting to this level here on our lower time frame to decide what our next line of action will be. Based on this current structure here on the daily time frame, there are two things that could happen here. If we take into consideration this impulsive move, price action could transition into a reversal pattern in the form of a double bottom structure if price is unable to break the previous high here to incite a reversal pattern here. And if we have a reversal pattern here in the form of a double top structure, then we should definitely be having a neckline which we shall be using to guide trading activity. And if you look at this area here, a neckline will be sitting very well at the 12,440 level, which we also want to be identifying on the lower time frame as well to guide trading activity. So if at any point in time we see selling pressure, continued rejection of the 12,760 level here, leading to the breakdown of the 12,400, this might be a retracement back into the structure that was broken a couple of weeks ago here at the 12,700. So let's scale back down to our 1 hour time frame. Let's see how price action is currently reacting to the 12,740. And then remember, we are also going to be using the 12,400 as a yardstick for the neckline of that reversal pattern if price action is unable to break the previous high. So going back down to the 1 hour time frame, this is what we have here. And remember the 12,400 level. This is getting too long here. So we have 310. Let me readjust this. Okay, so we have the 12,400 level here. Where is that going to be? That's somewhere around here. So the demand zone we have been witnessing since the beginning of the week here is falling exactly around the 12,400, which is the neckline we identified on the daily time frame. That's the potential neckline we identified on the daily time frame. And you remember we have this bullish trend line here, which has been guiding bullish momentum. So we shall also take this trend line into consideration as well. So if price action breaks down to 12,700 to the downside, and then selling pressure resumes below the structure, retest of structure followed by selling pressure, then selling, and once we sell here, if price action gets into that trend line, we move our stop loss accordingly, lock in some profit above this level, wait out and see how price action will react to that trend line to decide what our next line of action will be. So if a breakdown of the trend line happened followed by selling pressure, then we might likely be in for another wave of bearish momentum to the downside. So this is what we are going to be looking forward to sell the US tech for today. However, if price action breaks out of the 12,770 followed by buying pressure here, it's a very beautiful opportunity for us to add more position to our existing trade, and a further breakout of the 12,900 will be welcoming additional position on the US tech. So these are my views here And if you have any questions, feel free to drop your comments in your inquiries in the comment section. So I will be moving on to the next pair right now. And the next pair we shall be looking at is the GBPUSD, and on the GBPUSD we also have a profitable position running at this point. So let's quickly run through how the week started on the GBPUSD. Initially at the beginning of the week, we were able to identify a channel which was between the 1.20650 level. That was where price action started the week. The week actually started on a bearish note as we saw price action drop to the downside. However, as soon as price got into the 1.20300 level, we started seeing buy pressure around that area, making that level our support level for the week. So with a beautiful channel identified at the beginning of the week, we were looking out for either a breakout or breakdown of the channel to give us an opportunity to buy or sell. And in fact, later on Monday after our live session here, we saw the breakdown of that structure. Price action came into retest of structure, and we were part of this bearish momentum that moved about 70 pips in our direction before this bullish momentum happened. And during the live session yesterday, I told you that considering this continued buy pressure around this area, we might likely see a situation where price action will climb to the upside. And we also anticipated the possibility of a bullish momentum here, as we identified the 1.20400 to guide that move. And in fact, we saw the breakout retest of that structure following the Fed's chairman's speech yesterday, and we saw continued buy pressure above the 1.20400, giving us a very beautiful opportunity to join that rally to the upside. And in fact, if you are part of this trade, well done to you guys, kudos to you, as you will currently be running with about 50 pips in profit at this point. So I will be advising you to move your stop loss accordingly right now to lock in some profit, and somewhere right around above the 1.20650 level seems most appropriate. So somewhere around this area, move your stop loss to that area, and let's wait out to see how price action will be reacting to the 1.2100 level. So for today, we shall continue to hold on to our bullish bias here, with the hope that price action will break out of the 1.2100 level for more opportunities to add more position to our existing trade here. So for the GBPUSD, we are on a bullish momentum, and we continue to hold that bullish momentum as long as price continue to trade above the 1.20400. Now, to further make things easy for us to guide trading activities for today, let's connect the series of higher lows here. As we can see, we have been witnessing this bullish momentum since the beginning of Tuesday's trading session. Let's make this a little bit thicker. So we have a bullish trend line here that will be guiding our expectation. So as long as price continue to trade above this bullish trend line, we want to feel comfortable in our buy position. So it might happen that price will drop back down into the 1.20650 level. If it so happens price drops down into the structure and we start seeing buy pressure, you want to be adding more position to your existing trade. And with the further breakout of the 1.2100 level, we look out for more opportunities at that above the 1.21 level to add more position to our existing trade here. So what are the things we are using to guide our trading activity today? The first one is this bullish trend line. So as long as price remain above this bullish trend line, we feel comfortable in our buy position. Then we also have the 1.20650. If price so comes down into the structure, we want to be adding more position at the site of buy pressure around that area on our lower time frame. Then we also have the 1.2100 level. Breakout of that structure is also another good opportunity to add more position to our existing trade here on the GBPUSD. So these are my views on the GBPUSD. I hold on to a bullish momentum here as long as price remain above that structure. Now moving on, if you have questions, feel free to drop your inquiries in the comment section. It's okay. I will be checking the comment section from time to time to see if there are any inquiries in that regard. Now moving on, the next pair we shall be talking about today is the XAUUSD. And remember yesterday during the live session yesterday, I told you how the selling opportunity we have been enjoying since the beginning of the week might likely fade out as we continue to see buy pressure around this area. And in fact, the buy pressure here has been respecting this bullish trend line to further emphasize the strength of the buyers at this point. And one thing I told us yesterday is that since we already have a resistance point for the week which falls around the $1,880 level, I will be suggesting that breakout of that structure will be giving us an opportunity to buy. And what happened during the early hours of today was the breakout of that structure. We saw the breakout happen this morning, which got our position triggered at this point, though we are not really in significant profit right now, as price action still tends to be trading within a consolidation phase between the $1,886.50 level and the $1,880. So if you are not in this trade here, that is if you did not take advantage of this bullish momentum at the breakout of the 1,880, I will suggest that you look forward to a breakout of the $1,886.50 level for another opportunity to join this rally to the upside. For us to have a better perspective into this and see if this bullish momentum will be valid here, first of all, for those who have this move here, move your stop loss. Stop loss should be somewhere around the 1,875 level here, somewhere around that area. And then let's scale up to the daily time frame to see if the structure we have on the 1 hour time frame is sharing a congruence with what we have here. So look at what we have here on the daily time frame, and on the daily time frame it has been bullish since the beginning of the year, and in fact in the last 3 to 4 months price had consistently found higher lows, and as a result of this we have this bullish trend line on your screen, and you can see price has consistently respected that trend line. And at the beginning of the year we saw the breakout of the 1,820, breakout of the 1,860, breakout of the 1,900, after which price was caught within a channel between the 1,900 and the 1,950. Though we had selling momentum last week, bringing price back into a very important structure at the 1,860. And what makes this structure very interesting is the fact that it shared a beautiful confluence with that bullish trend line that has been guiding bullish momentum in the last 4 months. And followed by buying pressure right above the structure, it's a very good sign that price action is likely going to be respecting that bullish trend line one more time to be pushing price to the upside. However, we should not ignore the possibility that price action could actually break down that trend line, break down the 1,860 to incite a sell-off in this market. And the reason why I said we should not ignore that possibility is the fact that look at what happened here. Look at the candle here on Tuesday. Monday and Tuesday candle looks more bearish. As you can see, it closed in the form of a shooting star, which from a technical standpoint is a signal that sellers are still very strong in this market. So we need to be very, very careful at this point, as we are at a critical area in this market where price action shares a beautiful confluence with both the key level at the 1,860 and the bullish trend line that has been guiding bullish momentum since the beginning of this year. So we want to see some significant structures, and if we look at this area here at around the $1,884 level, we have been seeing multiple rejection here since the beginning of the week. So this is what we shall be using to guide our trading activity for any buy position for today. So the $1,884 level is something we want to be looking at on the 1 hour time frame to see if price action will continue to the upside. So scaling back down to the 1 hour time frame here, this is what we are seeing here on the 1 hour time frame. So let me readjust the current setup to fit into the new structure we just identified now, and that is the 1,885.884 area. So I will be readjusting this to the 1,885. So for the sake of clarity, I would relabel this to 1,885 and then we remove this one. So I want to see a buy stop above the 1,885 right now to guide a bullish momentum from this point. So since we have been witnessing some rejection of that level here, I'm going to readjust this back, please, because of the resistance point we have been seeing here. We see multiple rejection around that area, so let's readjust this back to the 1,886. So it's okay where it is right now. So a buy stop above the $1,886.50 level seems most appropriate to be able to position ourselves to join a rally from that point. So sorry for the breaking transmission. I never knew my mic was muted. Okay, so we should be having our buy stop sitting above the $1,886.50 level to join a trend continuation to the upside. Now, selling the XAUUSD for me at this point seems very complicated, considering this huge consolidation phase we have been witnessing here since the beginning of the week. So for me to sell the XAUUSD for this week, I really need to see a significant breakdown of this bullish trend line that has been guiding bullish momentum since the beginning of the year to confirm that sellers are likely coming in at this point. So if we do have a breakdown of this trend line with selling pressure below the structure on our lower time frame, it will be a very beautiful opportunity to join that decline. And if a further breakdown of the 1,860 level happen, in fact this is the most beautiful area to sell the XAUUSD, considering how important that structure is on the daily time frame. So these are my views here on the XAUUSD. We continue to look out for buying opportunity to add more position to our existing trade above the $1,886.50 level, and if price action breaks the bullish trend line here, doing a further breakdown of the 1,860, then we look out for selling opportunities around that area. So if you have any questions, feel free to drop your inquiries in the comment section, and I will be moving on to the last pair for today, and that is the USDJPY. And on the USDJPY, we have a sell position running at this point. Remember, at the beginning of the week started on a bullish note as we saw how price action broke out of that important structure at the 131.00 level, and we were able to position ourselves in such a way that we caught this move around this temporary demand zone, which was identified at the beginning of the week around the 131.900, and in fact we were part of that buy position which moved about 100 pips in our direction before we started witnessing the selling pressure yesterday in the last 48 hours. Now, during the live session yesterday, I told you that I have a buy position trigger that we should buy above this level and move our stop loss accordingly to lock in some profit here or to break even, and we were actually taken out of that position as price action broke down that structure. And one thing I told you yesterday is that we shall be using this bearish trend line to guide our trading activity. That was one. And then I also told you how important the 131.600, the breakdown of the 131.600 level, will be triggering a sell position for us. And this is exactly what happened during the New York session yesterday. We saw the breakdown of the structure triggering our first sell position, and a further breakdown of the 131.200 triggered the second position on the USDJPY. And if you have been part of this trade, kudos to you for being on standby to catch this move, as you will currently be running with about 77 pips on the first position, and if you are taking the second position below the 131.200, you will be running with about 35 pips in profit, with a total of over 100 pips at this point. Now that we are going into the New York session today, what is going to be our plan? What are our expectations on the USDJPY? Are we going to continue to see the sell momentum continue to the downside, or is this just a false breakdown that might likely lead to a significant bullish momentum to the upside? Well, before we answer that, let's run through the daily time frame. Let's have an holistic view of what is happening here. Let's refresh our memories on what our expectations were at the beginning of the week. Now, at the beginning of the week, we laid emphasis on how the USDJPY has been bullish in the last couple of years, and in fact, we had the bullish range to emphasize the strength of the buyers at this point. However, things got a little bit interesting in the month of April of last year. As you can see, price was initially caught within a channel right within the 131.00 level and the 127.00 area to emphasize some level of indecision around that area before we saw the breakout retest of that 131.00 level, which incited that bullish momentum that we witnessed during the second half of last year. Now, price action dropped back into that zone, that is the 131.00 level and the 127.00 area in the last 3 to 4 weeks. Now we have seen a consolidation phase around that area, and one thing about the structure is the fact that sellers were unable to break down the 127.00 level despite the strong selling momentum that we have witnessed here in the last 3 months. So the inability of price action to break down the 127.00 level, also sharing a beautiful confluence with that bullish trend we identified earlier, was a beautiful sign that buyers are still very strong in this market. And if we compare the structure with what has happened around this area in the past, especially in the month of April stroke June of last year, we saw that that level also has been a strong buying niche, and which led to the breakout of the 131.00 level that triggered that bullish momentum that we saw. Now we have a similar situation unfolding right now as price action. Let me zoom in so that we can see things more clearly here. So we have a similar situation right now after citing this engulfing candle following the positive NFP on Friday, bringing price back into the 131 level, and we saw a bullish momentum starting this week above the 131.00 level. And in fact, this transitioned into a very beautiful reversal pattern. If you take into consideration the impulsive move to the downside, we saw the first touch at the 127.00 level. Price action was unable to break the previous low, hereby giving us a higher low, and you can see what this has transitioned into a very beautiful reversal pattern in the form of a double bottom structure. And whenever we identify a double bottom structure like this, what we want to be looking out for next is to identify a neckline which shares a beautiful confluence with the 131.00 level. So we want to be seeing a breakout of the neckline area to make this reversal pattern a confirmed and mature one, which actually happened at the beginning of the week. A retest of structure followed by buying pressure above this level will definitely be a beautiful opportunity to join a rally to the upside. But the way things are looking right now in the last couple of days, it's likely we saw an engulfing candle, and to this candle we are not sure how today's candle is going to close. But one thing for sure is we want to see how price action is going to be reacting with this neckline area, which is sitting at the 131.00 level, to decide what our next line of action will be. In fact, I would love to see buy pressure around the 131 level to confirm that this is a strong reversal pattern so that we can join the bullish momentum to the upside. But if price action breaks down the 131.00 level, where price action transitions into selling pressure below that structure, we might likely be having a sell momentum back again into the 127.00 area. So with the information we have gathered here on the daily time frame, let's scale down to the 1 hour time frame and let's see how price action is actually reacting to the 131.00 level, after which we are going to be making a decision for today. So we are back on the 1 hour time frame, and if we look at what happened, first of all, let's acknowledge the 131.00 level, which is around here, and price action is currently trading below that structure at this point in time. Now, taking into consideration the previous impulse leg here that started last week, that is started from the 128.00 level, as we saw it rise all the way into the 132.900. And you know, from a technical standpoint, whenever we have an impulse leg like this, at a point in time, participants in this market who took advantage of this bullish momentum right around the structure will at one point in time initiate a profit-taking activity, which will be reflected on the chart as a retracement of that previous impulse leg. And if you remember, during the live session yesterday, we were able to identify a potential area where the retracement phase might end before the second wave of another bullish momentum will happen. And in fact, we were able to identify somewhere within the 50 and the 78.6% of that previous impulse leg that we have here. And one thing about this thing is that price action appears to have come into that area, as we saw price action test the 50% retracement of the previous impulse leg here, and price action is yet to break down that structure in the last 24 hours. Remember, we have a sell position running. We have one here. We had one triggered at the 131.600. We had a second one triggered at the 131.200. And for those who are in this trade, kindly move your stop loss to around the 131.200 level, as we want to be locking our position, securing our position to ensure that we don't get caught out in anything that might happen at this point. Now, considering the structure we have here, and considering the fact that price has been caught within a channel, so we have a channel here, we have the 130.500, which has been the support level in the last 24 hours, and the 131.370 level, which has been the resistance point in the last 24 hours. So we want to be seeing a breakout or breakdown of this channel to give us a signal of where price action will be going for the later part of this week. So if it so happens that price action breaks down this 130.500 level, retest of structure should be giving us an opportunity to add more position to our sell trade. And remember, all this area still falls within our TP target for the sell position, so the maximum point is the 129.00 level. And within this zone, if we at any point in time start seeing some buy pressure within the zone, we should be getting ready for another wave of bullish momentum. However, if price does not drop below the 130.500 and instead it breaks out of the resistance point at the 131.370 level here, a level which also shares a beautiful confluence with that trend line that has been guiding bearish momentum since the beginning of the week, that will be a beautiful signal that this bearish trend line is no longer strong enough to hold selling momentum, and a buy pressure above the structure or around the 131.700 on our lower time frame will be a beautiful opportunity for us to join a rally to the upside. So it's a beautiful setup we have here, very simple setup on the USDJPY, where we already have a channel identified at the 131.370, which is the resistance point in the last 24 hours, and the support level at the 130.500 in the last 24 hours. So what we are looking forward to right now, for those who are already in the sell position here, kindly move your stop loss, secure this current sell position right now, as we look forward to another signal, probably in the form of a breakdown of the 130.500 for additional sell position, or a breakout of the 131.370 level for a buy opportunity. So let's keep this in mind. Munch my screen if you want, so that you can use it as a reference point when you're about to make your individual decision. So on this note, we shall be calling it a day. But before we drop the curtain, let's do a recap of what we talked about today, for the sake of those who are not part of the live session, so that we can all be on the same page. So the first commodity we looked at this morning is the US oil, and on the US oil we already had a TP target hit at the $78 level, as we had over 500-600 pips in profit in that regard. And we now have a buy position triggered above the $78 level. And for those who had missed out on that buy position, I told you that if price action comes back to do a retest of the $78 level, we want to be joining another position at that point. And a further breakout of the $78.60 level will be welcoming additional position on this area. Now, there is a catch to this current position after taking into consideration this trend line that we identified here. Remember, we identified this trend line here, and I told you that we shall not ignore the potential of that trend line to continue to guide bullish momentum at this point. So I have said, if it so happens that price action breaks down the $78 level, followed by selling pressure below the structure, we might likely see a situation where price will drop further into this bearish trend, to this bullish trend line, to incite another wave of bullish momentum to the upside. However, if price breaks down the trend line, then it will be welcoming additional sell position to join a decline further to the downside. So this is what we shall be looking forward to on the US oil for today. So let's be on standby. Then on the US tech for today, we already have a profitable position here. As you know, we took advantage of the breakout of the 12,550 yesterday, and we rode the move all the way up. Some of you must have taken your profit. For those who have not yet taken their profit, I told you to move your stop loss to somewhere around the 12,650 to lock in some profit here as we continue to monitor price action. And one thing about this structure is that price is currently caught within a channel between the 12,770 and the 12,700 to emphasize the indecision in this market. So we want to be very, very careful of what our next line of action will be. So we are going to be waiting for a signal in the form of a breakdown retest of the structure to the downside to join a decline, if that is going to be the case, or a breakout of this channel to join a rally to the upside. For the breakdown of this channel, I want to see a retest of structure for me to join. So I want to see breakdown retest for me to join that decline. So we are not having a sell stop order yet. We are waiting for this price action to break, then give us further confirmation on our lower time frame to join that decline to the downside. As this is more or less looking very bullish to me, considering the structure, it's looking more like a bullish rectangular pattern where a breakout of the 12,770 has a higher chance of happening. Now, moving on, we talked about the GBPUSD, and on the GBPUSD, we had a buy position triggered yesterday above the 1.20400 level, and we are currently running with profit at this point with about 50 pips in profit. Now, for our trading activity for today, I was able to identify two simple structures we shall be using to guide trading activity. The first one is this bullish trend line here, which I said if price action continues to remain above that bullish trend line, we are going to be comfortable in our buy position. Then I also laid emphasis on the 1.20650 level here, where I said it's very likely that price will come back and do a retest of that structure. If we sight buy pressure above that level on our lower time frame, then we want to be joining the rally to the upside. Then we also have the 1.2100 level, which has a privilege of adding more position to our existing trade. So a breakout of the 1.2100 level will be welcoming additional position to the GBPUSD. So in short, for the GBPUSD, we are bullish on the GBPUSD. We continue to hold on to bullish momentum as long as price remain above that bullish trend line. Then we went on to talk about the XAUUSD, which appears to, I think we are already taken out of the current buy position that we have here, as price action has come back into our entry point at this area. And we also identified the $1,865.50 level, where I said a breakout of that structure should be welcoming additional position to the buy position. Now, selling the XAUUSD for me at this point, I told you, is very, very complicated, considering this consolidation phase we have been witnessing here since the beginning of the week. So I really want to see an outright breakdown of that consolidation phase for me to be sure that a bearish momentum is going to come in to stay. And one thing I want us to be looking forward to here, if price action continue to go to the downside, is that we have a bullish trend line here which has been guiding bullish momentum since the beginning of this week. So we want to see price action break down that bullish trend line for us to be thinking of selling the XAUUSD. And if a further breakdown of the 1860 level happens, in fact, that is the most beautiful area for me to be joining a massive sell move to the downside. So let's be on standby to catch either of these opportunities. So for me on the XAUUSD at this point, I remain bullish as long as price remain above the $1,880 level. So above the $1,880 level, let's remain bullish and look out for opportunities to add more position to our existing trade if price action breaks out of the $1,886.50 level. Then we went on to close the day with the USDJPY, where I've been bearish since in the last 24 hours after citing the breakdown of the 131.600 level yesterday. And in fact, we have two positions running here. We had a sell position here. We also had another one at the 131.200 level. Now, one thing peculiar about this current structure in the last 24 hours is the fact that price action has been caught within a consolidation phase where we have the support level of this channel at the 130.500 and the resistance level of the channel at the 131.370 area. So what we said we shall be looking forward to at this point is either a breakdown of the channel to give us an opportunity to add more position to our sell position here. Remember, we have moved our stop loss for the sell position to around the 131.200. remember that one. And then a breakout of the 131.370 level will be welcoming a buy position. So let's look out for this position. I have a buy stop order already above the 131.370 level, looking forward to a breakout of both that structure and that trend line to signal a bullish momentum to the upside. So let's be on standby to catch this move when they finally happen, and I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So on this note, I wish you best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week. Let's see how well they are doing, and at the same time get ourselves prepared for the New York session for tomorrow. Do have a wonderful evening, everyone. Bye bye.